Hello and welcome to our webinar titled Charitable Gift Annuities, Gifts That Pay You an Income for Life. My name is Kathy Cody and I'm the Director of Development and Community Relations at Hope Ministries. We're happy to be able to offer this valuable education to our wonderful partners in ministry. With your partnership, we've been able to serve homeless, hungry, abused, or addicted people in central Iowa for 103 years as a 100% privately funded, Christ-centered nonprofit. That is really incredible, and we certainly don't take it for granted. Thank you so much. We know a term like charitable gift annuities might sound like a dry topic, but truly it's a great opportunity for partners of our ministry, people like you with a heart for hurting men, women, and children, to learn how you can make a donation that not only helps spread hope, but also leads to a lifetime supplemental income for you. We've invited a leading expert to guide us today in understanding this simple and underutilized gift vehicle, and I'd like to introduce John Severson. John is the Strategic Advisor for the Charitable Giving Resource Center. He has professional credentials as a certified financial planner practitioner and is one of only 1,900 practitioners in the United States who is credentialed as an accredited estate planner. He was one of the first practitioners in the nation to be awarded the Chartered Advisor in Philanthropy designation. With more than 40 years' experience, John serves as a resource to nonprofits and professional advisors in the area of charitable, tax, and estate planning, a strategy that enables individuals to increase their income, reduce taxes, and preserve their estate for their heirs and the charities of their choice. So with that, I'd like to introduce John, and thank you, John, for leading our webinar today, and I will turn it over to you.
Well, thank you, Kathy, and thank you, everyone, for joining us. I hope it's a great sunshiny day where you are compared to where we are here in West Des Moines, and it looks like it's going to be a great day before the rains come. So our topic today is kind of helping you understand how you can get in a win-win-win situation by making a gift that actually gives back to you. That's kind of a strange deal, isn't it? But we're going to tell you how that works after we open the shades here. And the outcomes of this event, we hope, is going to show you how to enhance your financial estate plans to have a lasting impact for yourself, your family, and your community, particularly your Hope Ministries community. We hope to provide you a better understanding of the benefits of certain charitable gift instruments found in the tax code, which provide income streams back to you during your lifetime, and also provide a means by which you can leave a lasting legacy to your favorite causes after you are gone as well. That's what we hope that you'll find at the end of our session today. There's a verse in Proverbs 24. It says, "Through wisdom a house is built, and by understanding it is established. And by knowledge the room shall be filled with all precious and pleasant riches." So we hope to impart some knowledge to you that you will understand, and as a result can make some good choices based on the wisdom that you have gained from the time together. So here's a question for you. Will you choose to allow Congress to direct your philanthropy through taxation, which makes you what we call an involuntary philanthropist, or would you rather choose to benefit yourself, your family, and your favorite causes through what's called a planned or future gift? That is the question. Let me give you an example of why that would be important, particularly to ministries like Hope Ministries. Let's just say, for an example, you're currently giving Hope Ministries $1,000 a year. After you pass away, you won't be around to give them $1,000 a year to support the ministry. If it's important for you that the ministry continues for future generations, all you'd have to do is, through some mechanism, leave behind $20,000 out of your estate. And Hope Ministries will put that in their endowment, assuming that they can get a 5% payoff off of their endowment. The $1,000 that you had been giving each year is going to keep on coming each and every year after you're gone. And you can just see examples of different amounts of $5,000 a year. If that's what you're currently gifting, we ask you to leave $100,000 behind in your estate to do the same thing. Well, there are numerous ways that you can do that. Of course, you could do that simply by leaving a bequest in your will. What we want to show you today is a mechanism that you can leave that kind of a legacy to Hope Ministries that will benefit you during your lifetime. It's wonderful to leave bequest to a charity in your will, but you don't get any benefit out of that during your lifetime. And so we're going to talk about a particular tool that's been helpful to many people in both leaving a legacy and enhancing their later retirement years. And this is a proven tool for making a charitable gift that has a lasting impact on yourself, your family, and your community, and providing a lifetime income stream. So here's the question. How many of you out there in listener land have received regular checks from the nonprofits you support? Most of us are sending checks to nonprofits on a regular basis, not receiving checks from nonprofits. Well, let's see if we can turn that around. Would you like to start receiving checks from your favorite nonprofits? Well, through certain planned giving vehicles found in the tax code, this is very, very appropriate, very possible, and made possible through the auspices of the Congress of the United States putting these instruments into our tax code. There are really three such planned giving instruments that give back to you during your lifetime. The Charitable Gift Annuity, which we'll discuss today. There's also a charitable remainder trust, which you may be familiar with, and even a pooled income fund, which you may not be familiar with. Those are topics for another day. So we'll be focusing on the simplest of all these planned giving vehicles, the Charitable Gift Annuity. So, logical question, what in the world is a charitable gift annuity? Technically, it's simply a contract that guarantees annual payments to you for life in exchange for the gift of chosen assets to your favorite nonprofit. 100% of what's left in that contract will go to the nonprofit issuing the charitable gift annuity at your passing. This is a lifetime income stream, but after you're gone, there is where you're making the major planned gift to the organization to sustain future operations of the organization. These payments from a gift annuity can be either start right away, which is usually the case, or they can even be deferred, and we'll be showing you an example of each a little later. Either way, guess what? You get an immediate partial charitable income tax deduction. Now, when you leave funds to a nonprofit after your passing, you don't get to enjoy that income tax deduction. But with a charitable gift annuity, you're going to enjoy a charitable income tax deduction during your life, which is kind of the frosting on the cake. It's not the reason to set one of these up, but it really does enhance the validity of it. Charitable gift annuities have been around for over 160 years in the United States. They are not new, yet many people do not know that they even exist. So that's really the purpose of us presenting this to you today on behalf of Hope Ministries. Well, I'm kind of a visual learner, so I need to look at charts and diagrams. So we set up a charitable gift annuity. It's just a contract, as I said, but you see that little blue umbrella on the top of that annuity? That's a tax-sheltered umbrella. Whatever goes on underneath that umbrella is sheltered from income tax. And you also see a spigot on that annuity, and I'll explain how that works in a moment. So here we are. The donor can provide either a cash contribution, or it's even better sometimes to put in appreciated assets, appreciated stock, bonds, mutual funds, possibly real estate, to fund their charitable gift annuity contract. In exchange, the donor is going to receive a lifetime income for 1 or 2 lives for as long as they live. You cannot outlive a charitable gift annuity. And we find that older adults really appreciate having a dependable income source on top of Social Security, pensions, etc., as they grow in years. At the death of the donors, that's when the charity receives what's left in that charitable gift annuity account. So there's your planned gift for the future sustainability of Hope Ministries. So let's just talk about the benefits that the donor receives. One of the things that I need to really stress here is that you're going to receive a fixed lifetime income. Well, we don't know how long your life is going to be, neither do you. All we know is for the balance of your life, you're going to receive an income that will not change from this gift annuity. It won't go up or down with markets, interest rates, or anything else. Once it's issued, the same dollar amount will come to you every quarter for the rest of your life. You don't have to worry about it. There's some tax benefits, as I've indicated, in that you receive a partial charitable income tax deduction, which is based on 3 factors. the amount of the gift going into the contract, your age at that time, which has implications for your life expectancy, and then what's called a Section 7520 rate, which means nothing to you, but that's an internal present value interest rate that the government publishes on a monthly basis that affects the charitable income tax deduction, because what you're going to receive is a deduction for the present value of the future amount going to charity at your passing. So that's why this is based on your current age. And at that point, at your death, 100% of whatever in that contract passes to your favorite charity outside of your taxable estate, outside of probate. There's no one that can contest it. No one can argue about it. Generally, if you live to your life expectancy, according to the government tables, there should be about half of what you originally put in the annuity contract left for the charity. If you pass away prior to that, your anticipated life expectancy, they'll receive more. If you pass away later, they will receive less. But during your lifetime, your income is going to remain stable. Now you might say, oh, well, what can I use to fund this charitable gift annuity? Well, cash works pretty well, or check. But to the extent that you have appreciated securities in the form of stocks, bonds, mutual funds, ETFs, and so on, there's some additional tax advantage of placing an appreciated security into a charitable gift annuity, in that your deduction will be based on the current value of that security, but you won't have to recognize and pay the capital gains tax up front like you would if you sold that security just on your own. But you could also fund a charitable gift annuity with real estate, duplex, an apartment house, acres of land, farmland. We have a little of that here in Iowa. And even other types of assets, such as commodities. We've had people fund gift annuities with grain. And we've also had them fund gift annuities with closely held stock. Now, that's a stock of a business that you might own that's not publicly traded, a privately owned company. And you could fund your gift annuity with shares of stock, all of which have various benefits to you. So you might say, well, okay, if I do this, how much am I going to get paid out of my annuity? So who determines that rate? Well, it's not really even determined by our firm, the Charitable Gift Resource Center, who helps orchestrate these things, or Hope Ministries. The rate of payment on each CGA is depending on your age at the time of the gift, and those rates are determined by the American Council on Gift Annuities, an independent body that actuarially determines on a regular basis what is the right amount of payment that's going to be solid for the donor and not put the charity in Dutch for making payments that are too high based on current economic conditions. They review this twice a year, and in fact, it was just in July that they changed the current rates on new gift annuities, in fact, upped them a little bit. But once your gift annuity is in place and commences, then nothing changes. Now, the older you are when you set up your gift annuity and start receiving payments, the larger the payments are going to be. I'll show you a little graph about that. The payments can be paid to you quarterly, semi-annually, or annually, depending on how you desire to receive them. Most people like them quarterly. They like the regular income. Sometimes they like to have that income come in to help them pay their quarterly tax estimates on the rest of their income. So here's an example of just at various ages of the current gift annuity payout rates. So if you're a 65-year-old and set up a gift annuity today, you're going to receive a payment of 5.1% of the amount you put in each year for the rest of your life. If you're 75 years of age right now and an individual, you receive a 6.2% payout. If you're 85, it would be 8.3%. And if you're like my mother, who's 92, you'd receive a 9.5% payout. Kind of gets your attention, doesn't it? Even in light of the slightly increasing interest environment that we're currently living in, these are substantial improvements for someone on a fixed income. Let's talk a little bit more about the tax benefits of a charitable gift annuity. You do receive a partial income tax deduction when you set this up. It's not a full deduction because you're not fully giving away the whole amount, because you're retaining a life interest in the form of those payments for the rest of your life. And so you get a deduction equal to the present value of the future remainder that's going to go to charity at your anticipated life expectancy. Then what about the income you receive out of this gift annuity? Good news. Even that is partially tax-free to you. Sounding pretty good, isn't it? Then at your passing, what's left in the charitable gift annuity contract goes to the charity that you selected outside of your taxable estate, roughly equal to about 50% if you die right on time at your life expectancy. Well, as an independent advisor, I always like to tell people that come to me for advice, what are the advantages and disadvantages of any particular planning tool like this? Well, the advantages of a gift annuity are plentiful. It's nice that you get this initial income tax deduction, although that's not the main reason you would set one of these up. But the guaranteed fixed annual payments for life is a wonderful benefit that you don't have to worry about, well, when my CD matures, I don't know what kind of interest rate I'm going to get. Once you set up this gift annuity, you know to the penny how much you're going to receive every quarter for the rest of your life. Then having part of that income be partially tax-free, that's a pretty nice thing. That's hard to get anywhere else. And finally, you are going to leave a lasting impact in your community, particularly the wonderful work that Hope Ministries continues to do for our community. And you're knowing that you're doing well, while at the same time you're doing good for others. There are some disadvantages of a charitable gift annuity. And the main one I would say is that it does lack some flexibility. When I say you get a fixed income for life, it's not changeable. Well, that's an advantage. It could be a disadvantage. If you want to do something different in the future, you really can't. You cannot change that income stream once you start the program. The only thing you can change would be to discontinue your payments in the future and give the remainder of the annuity to your nonprofit early before your death. And that happens every once in a while. Maybe you were anticipating to receive an inheritance from great Aunt Gertrude, and now you've got more income than you really need. And so, maybe Hope Ministries could use some money for a building program now. So I'm going to give up my gift annuity and I'll stop my payments and let them have the balance early. That's really about the only thing you can do that's not locked in. So what a charitable gift annuity is not. A lot of confusion when we use the term annuity. That term annuity really simply, and according to the dictionary, means a series of systematic payments. Your Social Security income is an annuity of sorts, okay? But, in the marketplace today, financial services firms have said, these annuities are a nice investment program. A charitable gift annuity is not a commercial annuity issued by an insurance company. There is no involvement with an insurance company. A charitable gift annuity is simply an agreement between you and your favorite charity. In addition, the commercial annuity, which will pay you a life income stream for the rest of your life, but it has no charitable income tax deduction because insurance companies, if you hadn't noticed, are not nonprofit. And you essentially are naming the insurance company as the beneficiary of your immediate annuity. At your passing, they get to keep whatever is left in the pot. And they just have large numbers of people that they put into these programs, so sometimes one pot will run out of money and they'll supplement another pot. That's how commercial annuities work. But that's not what we're talking about in this case. So let me give you an example. Here's our friend Mary Jones. She's age 75, and she has $20,000 of cash that she needs to do something with. She'd like to increase her retirement income. So if she places that $20,000 into a charitable gift annuity, she's going to receive a 6.2% income stream for the rest of her life. That's according to the current table. In so doing, she gets an income tax deduction of $9,151. That's the present value of what's actuarially calculated to be the remainder at her death if she dies on time at her life expectancy. So that's how much she gets to take as a current income tax deduction on her income tax return this year. And under the new tax laws, that's still very possible. And in fact, these charitable gift annuity deductions will actually help people that might not be able to itemize their deductions this year to be able to itemize the rest of their deductions by getting over the standard deduction thresholds, which have been doubled under the new tax law. Okay, so let's see, 6.2% of $20,000. Oh, that's $1,240 a year. Well, look at this. 875 of those $1,240 are going to come back to Mary tax-free for about the first 12 years until she hits life expectancy. Isn't that neat? And of course, if at Mary's death, whether she dies early or late, whatever's left in the account is going to go to her favorite charities, hopefully Hope Ministries, free of tax, free of estate tax, outside of probate, no cost, no hassle. The family doesn't have to worry about it. Now she's left a legacy behind. So let's just take a look from a planning perspective. Well, what other options might Mary have to do with her $20,000? Well, she could put it in a savings account. If she's lucky, she might be able to find one paying her 1%. Let's see, 1% of $20,000. Oh yeah, that's $200 a year. Oh, but Mary has to include that as taxable income, and then her 25% bracket, federal and state, she only gets to keep 150 of the 200 because she had to share the other 50 with the taxing authorities. Well, if she really takes a bold step and ties the money up for a couple, 3 years and a certificate of deposit, she might get 2%, maybe 2.25%, but 2%. Now she gets $400 a year income. Oh, but yeah, that's taxable. After paying the tax, she has $300 a year to spend. Or she could put $20,000 into a charitable gift annuity. Oh dear, at age 75, her payout is 6.2%, which is $1,240 a year, of which $875 is tax-free. And so by the time she pays the tax out of the $364 that's left, her spendable income after taxes is $1,148 a year. Not a bad increase in her income. But the frosting on the cake is in the year in which she sets up this gift annuity, she'll have a charitable income tax deduction of $9,151 on top of her regular charitable giving. Not a bad plan. Oh, I'm going in the wrong direction in my slides here. Okay. Well, Mary also has a sister, a tag-along sister, who is 20 years younger than her. Susan Jones is only 55. And, you know, she was having dinner with her sister Mary, and Mary was telling her how great this new charitable gift annuity was and how she's enjoying the tax benefits, the increased income. And Susan's saying to her sister, well, you know, I'm not even retired yet. I'm not going to retire for probably another at least 10 years. But I've got about $20,000 in cash that I need to do something with, and I really would like to help my favorite charities. I wonder if one of these could work for me. Well, what we do for Susan is set up what's called a deferred charitable gift annuity. She put $20,000 into a gift annuity, but not receive any income from it until she's the same age as her sister Mary, age 75, 20 years from now. Well, she's going to work for another 10 years, and then from age 65 to 75, she's got some special pension payments that are coming that only last for 10 years. So she'd like to use this device to supplement her income after that payment stops. So if they kick that in at age 75, we can do that. We can set it up today. And when we do that, even though Susan's not going to receive any income from it for 20 years, she still gets to take a generous income tax deduction today of $11,800, even more than her sister. Well, the reason for that is there's going to be more going to charity at her death, because for the next 20 years, we're not paying Susan anything out, so her contract is going to grow with the charity. And as a result, when she hits age 75, she's going to get $2,580 a year of income, of which $660 is going to be tax-free. See how that works? So, but her first payment won't be until the year 2038. And then as a result, there's a lot more money in the pot, so that at her eventual passing, the charity is likely to receive the full $20,000 or even more, depending on when her passing occurs. Again, going tax-free, outside of probate, to her favorite nonprofit at that time. So that's how a deferred charitable gift annuity can work. So let's see, who could really benefit from one of these charitable gift annuities? Well, we find that it's really designed for older individuals. Age 55 is about the minimum age that that you can even obtain one of these gift annuities. It really should be someone who has a desire to give, but really wants the security of income from their retirement. We'd like to do something for Hope Ministries, but I'm afraid I'm going to run out of money. So let's see if we can work this out where I can benefit myself now and Hope Ministries later. That's how a charitable gift annuity could help that individual. And there are a number of individuals wishing to increase their income stream and have those continue no matter what happens to the market, but they don't want investment responsibilities. They just don't want to think about it. They just want to go to the mailbox every quarter and pick up their check. It would also be helpful for individuals with highly appreciated but low dividend paying stocks, bonds, mutual funds, other securities, or other property. We've been able to help people double or triple their income from their existing holdings by using a charitable gift annuity on a very tax effective basis. So you can actually try this for yourself if you go to our firm's website, which is www.magnifyyouриmpact.com. The slide on the left shows what you'll see when you get there. The slide on the right shows what will come up if you hit that little green button. So I'm going to see if I can move over to that right now and show you how that works. There we go. Oh, no, that's not it. We got to get to the right spot here. There we go. Okay, so now we're at our firm's website, Charitable Giving Resource Center. MagnifyYourImpact.com will get you there. And you see this little green bar up here? It says Charitable Gift Calculator. You just simply do a click on that. And then you come up with what's called a Charitable Gift Illustrator. And in this case, we're looking at illustrating a gift that pays you income. And it would be a charitable gift annuity, not a charitable remainder trust in this example. If you go down to this little button that says Calculate Immediate Gift Annuity Payments. And this little chart comes up. Okay, so let's just say, well, you're not 75. Let's say that you are age 81, okay? And you're going to set up a gift annuity just for yourself. You could add another person, but we won't do that right now. And you're going to contribute, let's just say, you just press your mouse on this little device here, and you're going to say, I'm going to contribute, let's see, a nice round number, $31,000. That's what I want to contribute. As I was doing that, if you happen to notice over on the right side, it immediately tells you what your charitable income tax deduction is. A $31,000 contribution into a CGA for an 81-year-old produces a $15,663 charitable tax deduction. And your income payment for life is going to be $2,325, which is about 7.5%. That would be your payout rate. And then down below, it even breaks down how much of that $2,325 a year will be tax-free. It'd be $1,741.75. So instantly you say, oh, that's how that works. And then assuming you die at your life expectancy thereafter, about $15,500 would be payable left over for Hope Ministries and their work. And you might say, oh, well, you know, I've got a sister and she's 75 or 74. What would happen if she did a charitable gift annuity for, let's say, $40,000 as an example? It's a little tricky. Oh, there we go. Boom, it instantly changes on the right. She'd get a $17,000 deduction, $2,400 a year, 6.1%. You see how that works? You can just play with this for free to know how would I want to structure my charitable gift annuity. You can also add another person in, so you could have a dual life income for two people. It doesn't have to be husband and wife. It could be siblings. It could be you and a friend. And then you could even say, what happens if I put appreciated assets in? It changes the tax picture a little further, and it's actually even better. Okay. So that gives you a little tool to play with if you would like to delve into this further on your own, or of course you can always contact Kathy Cody or David Burrier at Hope Ministries. We'll give you their contact information a little bit further, and they can help you do the very same thing. So I need to get back to my presentation. I click on this and click on that. Okay. I hope that was helpful. So there's a verse in Deuteronomy that says, every man shall give as he is able, according to the blessing of the Lord, your God, which he has given you. So who does all of our resources belong to? They really come from the Lord. We are just here as stewards, maintain those resources and use them effectively for his purposes as well as ours. That would be the philosophy of Hope Ministry. That would be the philosophy of me as your presenter. So with that, I hope that gives you kind of an outline on how these charitable gift annuities work. We do have some time here that we're willing to take questions. If you have questions, you can simply go down into the chat box over on the lower right-hand side, and we can take questions there. You can just type them in, and we'll read them off. Oh, we do have a question. Is it possible or desirable to do this within an IRA? Is it possible or desirable to do this within an IRA? The short answer is no at this point. If you do anything with an IRA, it triggers tax no matter what you do with it, except if you're over age 70.5, you can send money directly from an IRA to charity as a charitable gift up to $100,000 per year. It even helps you qualify for your required minimum distribution. However, that is not allowed at this point to fund a charitable gift annuity with IRA dollars. However, I understand there is some legislation that has been written that could possibly allow that in the future. It's been brought up in the past and never got out of committee, but that would be a wonderful event if that could happen, because many people really don't care to receive these taxable IRA dollars. They'd rather do something more charitably with them, but they're a little willing to give up the income from them. And so wouldn't it be great if you could fund a charitable gift annuity with an IRA distribution? So stay tuned. You cannot do it today, but if the Congress gets their act together and gets some other things taken care of that are on their list, hopefully that would be a possibility in the future. Let's see.
John, while we wait and see if we receive any additional questions, some questions, a couple that we receive from time to time at Hope Ministries, thought we could cover those. Can any organization provide CGAs? Can any organization do that?
Oh, yeah, good question, Kathy. Well, theoretically, any nonprofit could provide charitable gift annuities. There are 1.5 million charitable nonprofit organizations in this country. Currently, only 4,000 issue charitable gift annuities themselves, because there's a lot of expense, a lot of risk. The government regulation gets involved with that. And so as a result, the answer is practically not many do offer gift annuities, which is probably why not many people know about it. But we've come alongside, our firm has come alongside Hope Ministries, who would be in that same category, and we arranged such an arrangement that they can offer gift annuities through our firm. We have a special national charitable gift annuity program that takes the risk, the administration, and the liability off of Hope Ministries' balance sheet, transfers it to another independent foundation that does nothing but set up these charitable gift annuities. And you might say, okay, well, let's see, how stable and solvent is that organization? Because that's who would be guaranteeing my income payments to me. And the answer is very stable and solvent. The National Gift Annuity Foundation is who we use for that. They currently have $104 million of unrestricted assets backing up gift annuity payments that go through them. And that's really important from a regulatory perspective, because to offer charitable gift annuities in states, including Iowa, but many other states, the nonprofit has to post that they have reserves being able to support those payments. And many charities just don't have unrestricted reserves. They're using it to do their ministry right now. So if that helps answer your question. So theoretically, any nonprofit can offer gift annuities. Practically, most do not. unless they outsource it through a specialty firm like we help you with.
Very good, very good. Another question we receive sometimes, can an annuitant name more than one charity as a beneficiary?
Yeah, that's really up to the issuing charity. And in our case, if we use the National Gift Annuity Foundation as for Hope Ministries, we've had some that have actually split it between two nonprofits. That makes it real easy, and you can have one contract that goes in different percentages to two or more charities, so that is absolutely possible. Yeah, and that does help some people that people contribute to more than one nonprofit and might want to benefit more than one nonprofit at their passing, and as a result, this would be possible even through one set up through Hope Ministries.
Wonderful, wonderful. Can an annuitant, you talked about, John, that these are different than commercial annuities. So I think I know the answer to this, but I'm going to ask you, the expert. Are CGAs regulated by the State Insurance Commission?
Yeah, that depends, and that they are depending on the state where the donor lives. So if you, Kathy, have a donor that lives in Missouri, that would be regulated by the Missouri Insurance and Securities Commissioner. In Iowa, it definitely is the Iowa Securities Insurance Commissioner. In Florida, if you're a resident of Florida, it's the Farm Commodities Regulator. I mean, every state has their own regulator system, and to offer gift annuities in these various states, we have to have the program registered with the state authorities, who then watch over to make certain it's being run right. What we don't have here is any government backing of the payments. The payments are still backed by the reserves established by the issuing nonprofit. Much like an insurance company is not government backed either. They're going to put up their own reserves to guarantee payments to an immediate annuity to their annuitant same way. Okay?
Okay, very good. So one more question. You mentioned the option of the annuitant could stop payments and give money to the nonprofit early if he or she chose to do that. Mm-hmm. Would there be tax implications in that case?
Yes, favorable tax implications, because in effect you're giving up some of your income for now rather than at your passing. So there would be an additional partial charitable income tax deduction calculated at that point based on your remaining life expectancy. Yeah, that's exactly right. So that's another win-win-win situation, isn't it? If that situation arose in a person's lifetime, that would be beneficial.
Okay.
You bet. Well, let's see if we had any other questions. I don't see any others coming in at this point. Well, I tell you what, if you have additional questions, guess what? You can contact Kathy right there at Hope Ministries, or our associate David Burrier, and the phone number is listed there. Des Moines, 265-7272. They'd be happy to meet with you privately to discuss how a charitable gift annuity might work for you and your family, and just to answer any of your plan giving questions. Kathy, any final concluding remarks?
Just great information. So thank you, John. I think if more people knew about these, I think they would be used much more, because lots of great benefits. So thank you for sharing your expertise today. And as you said, myself or David would be very happy to talk with our giving partners about this opportunity. And our information is there on the slide, or call us or go to our website. And thank you for your time, and thank you for educating us today.
Always a pleasure being with you, Kathy, and God's blessings to you and your ministry at Hope Ministry.
Thank you so much.
That will sign off.
Okay.